What's going on, guys? It's your boy TB from SMB back at you again. Coming at you with a little market recap. I uploaded a video already just now. It's fresh on the press, off the press. Just talking about the outlook of the current situation we're in, the news that we're getting later this week. But I wanted to upload another video just talking strictly about the price action that we had today, what I personally did, my trades. We got some green today, which I was thrilled about, so that's why I'm like, hey, I'll talk about it. I had a green trade, why not? Um, but first things first. All right, today we open up and we gap down on the S&P 500. Uh-oh. Really? It's a good time for trading view to break. Are you serious right now? Oh, okay, there it is. So looking at the 5-minute chart on the S&P 500, we gap down. We gap down below 3,600 just barely. We sell off below that. We continue to break the low that we had over here at 35.88. Sell off, sell off, sell off. We base, we find support, and now we know that we have a strong support. So I'm going to throw a little line right there to tell myself I have support at that line. We wick right down there, and then buyers step in. We get a little oversold bounce, and we're rallying nicely. So just on my assessment of the S&P right now, I see that we have a strong supply zone up here. This is where sellers are waiting. They have sold us out of this little box up here from about 36.34 up to about 36.50. We know sellers are up there. As you can see, we try to get up there. Sellers step up. And now, just strictly going off of that, I could see where the market might reject from today. And sure enough, it did. We get good volume, ripping up, ripping up. We come up to the supply zone, and sellers step in, and it just blocked us off. Nothing. Couldn't get back above that. And then on top of that, we got that terrible news from the Bank of England. Their Andrew Bailey, I think his name is, basically England's Powell came out and said, yeah, we're done propping up the bond market. You guys have till Friday to get your shit together, and then we're done, and you guys are screwed. And the market just hemorrhaged, just bled like crazy off of that. VIX elevated like crazy. And we just dumped off of that. We dump right down. Look at that. Perfectly to the low of day before we see buyers step in, and we get a nice little bounce from 35.60 up to about 35.88. And I believe we are still, yes, we are going up a little bit after hours right now as well. But I'll just jump into the trade I took today. I was pretty. I mean, today was just chop fest. I mean, we gapped down. If you had puts overnight, great. Take profits. Good for you. But I was not going to take any long. I did not see a good long setup here. I think the market kind of just found a point where sellers were exhausted and buyers were able to step in and get a nice little rip off of that. Man, look at that volume compared to yesterday, though. Holy crap, that volume yesterday was abysmal. And we got some nice buying volume. We come up, and what does Nasdaq do? It wicks right up to 267. Look at this. This is just too easy. What is that? Right there, a supply zone, and it wicked right up to it. Crazy. And then all I went off of, this was just, I love easy, simple, naked trading right here. We have our uptrend. It comes down. It breaks the uptrend. We get a wicked reversal candle. Fully engulfing green candle on pretty solid volume, but it was just a nasty fake out. We come back up to that trend line. We resist it. That's why if you, I bought the puts like right here on this candle. So I bought puts when they were getting expensive, and that's what happens when the price starts to go down. Puts they get momentum. The price starts to get up. Everyone's trying to buy them, and then they throw in a little wicked reversal to make you think, oh no, the market's actually going up. But then it could have gone up, but I just got really lucky that this news came out from the Bank of England, and it just dumped the Nasdaq straight from 265 all the way down to 261. I ended up taking profits right about here. Or no, it was right around here. So I could have gotten a little bit more, but I wasn't getting greedy. It was a 130% gain. I'm thrilled with an easy 130% gain. No one goes poor from taking 130% gains, you know. So I took it, and that was it. That was a nice gain, 130% gainer off of that, easy money. And I said I don't need to do anything else today. That's enough for me. But just looking at the market in general right now, same thing with the Nasdaq. It did make a new low over here, but we're just wicking. Buyers are stepping up at these lows, so you got to watch out for that. We know where support is right now. and we're basically at that support. So that's why it's a little worrisome if you're entering puts today. The market is just it's down bad, and we are not quite due for a bounce, but I could definitely see one happening. Um, just like I talked about in my recent video. So this little blue dotted line right here, I could see that trend line support bounce off it right there. We almost came up to it, bounced off of it, almost touched it, bounced. So I'm watching that. And just looking at the daily chart, we've had 4 red days in a row now. Um, so we just know it's going to be on news. That's basically the way the market's been working. It's been just working on news. I mean, we got these 2 crazy green days off news that the Fed might pivot, and that just was a non-existent. They just pulled that out of thin air. But when we get hard news like unemployment data going down, then that's when the market dumps. So what are we getting? We got PPI numbers out tomorrow morning. We have CPI out Thursday morning. We have all the big bank earnings out Friday morning. So there is plenty of bad news to go around, but that could also mean that the market is ready to bounce. I mean, it bounced like this. It bounced 2.5% one day, 3% the next day. The biggest 2-day bounce on the market since April 2020 on nothing, on thin air, on news out of thin air. God, I gotta fix my headset. On news straight out of thin air that they pulled from thin air that was based on nothing. So if the market is able to do that, then if we get any shred of good news, imagine how hard the market might bounce. It could bounce like crazy. So you got to be very, very careful. You got to respect your stop losses, trade your plan, have a plan going in. But back over to the S&P 500. My plan basically is I'm waiting for the 30-minute 50 simple moving average, which the system, the buy sell signal system, I'm waiting for a retest of that. But as of now, if you get up close to that, you short that sucker. That is the system. If you're below that, you short the rallies. And up until now, it's worked. You see this? We get a nice little rally. You short it, money. Big rally, short it, money. That's just the system. That's the way it's been working. I'm seeing this little red trend line we have right here. I'm watching out for that. I believe we could come up and test that. It's not like a huge trend line or anything. It's kind of just this downtrend that we're in. And I could see us testing that, breaking out of that, coming up here. This 30-minute simple moving average is going to be right on top of that, though, if we continue to chop sideways. So I'm watching out for that. But in between this trend line, in between this baseline support, I'm not touching anything. I got to see an actual break of that support, not just a wick down, not just like 2 5-minute candles. I got to see something major. And if we do gap down tomorrow, I think that's going to be a big, big bear trap. I think if we get a crazy gap down tomorrow or the day after that, it could be a crazy big bear trap. You got to watch out for that. But we are just like at yearly lows right now, so it is super scary to consider doing shorts. I think your chance to short was up here. Now you're a little late to the party. I'm not saying you should be looking for upside, but I'm saying if you do see rallies, to very much be considering shorting them because it's been basically free money up until this point. But now we just have to zoom out and we got to look at the S&P on the weekly level and tell ourselves and take a look at levels from back here because that's what we're dealing with now. So one level I have marked out right here is this level right here at 35.69. And then the level right below that, which was a double resistance, we resisted in August of 2020. We resisted it again in October of 2020 because that was back when I think Delta strain was coming out. That's when they released Delta. But that was the worry back here in the market. That's why you had these big red-green weeks back at here because there was a new strain. Oh no, how bad is it? And then once we broke through, what did the SPY do? What did the SPY do? It just kept going. So that big old past resistance could very easily, and we have not retested that support. This is the first time we've retested that support. The SPY did not look back after we broke through there. So this level, I might just, there you go, make it nice and clear. This level from 3,500, and then of course 3,500 being a big psych level, to about 3,571. That is where I could very well see us finding some support, short-term support, not long-term. I think we're going far below that. I think we're easily going to at least 3,200. And this also, if you draw fib levels, that's also a huge fib level right there at 3,500. Bam! And you can see these fib. Let me do something here. Go. All right, that kind of helps. But you can see where this fib level is right here. The golden fib level, 38.15. That's right where the market wicked down to back in May. We tapped right off of that on the weekly and bounced. So I imagine we're heading for the fib below that one. And you can see where the market bounced over here. It also bounced off that fib, the 0.786 fib, and then the 0.618 fib bounced off of it, and now we're heading for the 50% Fibonacci level at 3,500, also big psych level. But below that, I am definitely thinking 3,200. That's the next fib level below that, and then 2,800 being below that. I don't think we see 2,800, but I think 3,200. If we do get our flash crash, panic selling, I think that's a realistic target for this recession that we're in. But for short term, I'm looking at 3560, 3570 to 3500. I'm looking at that for a bounce zone. But we could very well just tear right through it. You never know. Taking a look at VIX. VIX is back up in that supply zone that it typically wicks out of. Look at that. Every week it wicks up to it, comes down, or not every week, but every time it's gotten up there, it rips up and then wicks out. So we gotta watch out for that. VIX is very elevated right now. It's scary going into shorts when VIX is this high at 33. But anything holding up above 35 on the VIX, and that's scary. That's scary territory. We haven't been that high since the start of the year, back over here in January of 22, or 2022. Doy. But a realistic target for VIX. I mean, VIX got way up here at 87. I think that was the highest, maybe the highest it's ever been. No, highest ever been was back in 08. Yeah, got up to 100 in 08. So that just, you gotta zoom out and really ask yourself, how bad are things on a volatility level? And they really haven't gotten that bad. Not even as bad as it got back here during Delta. So you're looking for above 40 before you're thinking the market has bottomed. You're looking for a big old dingus up to 40, up to 50. That's telling you the panic is high, and we have just not gotten that high of panic. I mean, we've had high panic selling days, but not like, oh my god, everyone sell everything kind of days. So you're looking for that. Looking at the dollar index, it's just in this perfect little rising wedge. Or not even a rising wedge, more like a rising channel. So we could rip up to 115. That's super bearish if it does that, but it is on an uptrend. There's no doubt about it. And it tried to break out of it, but it just bounced off 110. And I imagine higher high, higher low. You're expecting a higher high after a higher low and a higher high. So just with that in mind, not much else to say about the dollar. Bearish if it goes up. Looking at U.S. 10-year yields, yep, those go up and the market goes down, and that's basically all there is to it. I mean, look at what the yields did back here. If I can even find it. Wait a second. Yeah, that was the fourth and the third. So when yields come down, that's really bullish for the market, and now you see yields are ripping, showing you weakness in the bond market. I could explain that for hours, but gotta watch the U.S. 10-year, U.S. 2-year also. But yields are just ripping right now. Not good, not great. It's almost to 4%, which a little history lesson. That's about where it was, way over here in 2008. That's not good. You don't want to see that. So watch out for that. Let's look at Apple. So Apple it's holding up. Apple is getting bought up when it wicks down to this 138 level. Right now after hours it's slightly down, but we're just kind of on this support line that we bounced off of a couple times. So that's got me a little worried for a bounce. It also has a super clear trend line right there that it bounced off of today. So Apple is kind of looking for a bounce too. It's also got that 30 simple moving average, and then we also have a super duper obvious supply zone right here that we wicked up to today. So Apple at 141, expect a reversal, 141 to 141.50. If we break out above that and we close a candle above that, I would be looking bullish, and that just so happens to be right next to this trend line, so watch out for that as well. Zooming out on the weekly, let's see. Not much I'm seeing on the weekly. Daily, ugly. Just low volume. I mean, this is what you'd expect going into CPI data. Just low volume. across the board, we're getting low volume. It was pretty low. It was actually higher than yesterday on the Nasdaq, but still lower than the average big red sell-off days that we've been having. And the Nasdaq is just completely bleeding, but still a little low for the SPY. So yeah, just get your levels. These are the levels I'm trading on. So I'm looking at SPY and I'm telling myself I'm not trading anywhere between 362 to 255. It's just a big chop zone. I gotta wait for a breakout, and you'll know you get a breakout if you see strong continuation, strong volume. You see, look at the volume. Look at the volume right here. We rip up high volume, and then it's gone. Poof, it's gone, and we just see selling, 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 selling. So you got to see that volume continue through these zones. Otherwise, they're perfect short setups. And then, of course, my go-to trading method right now, the system, we have this 50 simple moving average, this big yellow line right here at 364. So if we get a chop zone, that yellow line comes down to 362. Then we have a confluence between that supply zone with the 50 simple moving average. I expect it's going to test it at some point, but gotta watch out for those two things. Otherwise, guys, it's very unpredictable. It's like earnings for the entire market. Trying to predict what is going to happen on CPI. There is nothing on this chart that will tell you what is going to happen, besides maybe the fact that we're at the yearly lows. I don't think we've been at the yearly lows with the CPI read coming out. So if you're brave, you can be like, I think the market is going to bounce because we've already factored in that inflation is going to be high, or we've priced it in, as some people like to say. So if you do go calls, I would consider hedging yourself with some puts. Just hedge your positions, because if you're going to be wrong in this market, you're going to be very, very wrong. Like 3%, 2% green day wrong if you try to short it. So be very careful out there, folks. But just trade your plan. Expect fake outs, expect crazy market swings. It is completely bipolar right now. Just be very, very careful. Just respect your plan. If you enter a trade, know exactly where you're stopping out. Know exactly where you are where you're going to decide your setup is invalidated. You have to decide that before you enter the trade. But there will be trades out there. Just got to watch out for them. Just don't compromise your plan. Have the plan. Stick to the plan. The plan is the man, I'm telling you. Anyways, guys, good luck out there. Be very, very, very careful these next couple days, even Friday. But I'm thinking we're getting that panic sell event. If not Friday, maybe Monday of next week, maybe the Friday of next week. It's going to come on one of these weekends where everyone's just going to be like, oh my God, what's going to happen next kind of thing. So be very careful. And how many times am I going to say that? But thanks for watching. If you liked the video, drop a like, drop a sub, drop a comment. I appreciate it. I love it. I'm trying to grow the channel. But right now I'm just kind of doing this for fun. No one really watches these. So yeah, I'll catch you guys later.